Hi everybody and welcome back to my channel. So I thought I'd start the year by really honing my trading plan and in particular my trading strategy, where I'm going to be focusing on clean, naked price action. I'm going to be taking off the indicators, removing any distraction, any clutter, and look at some clean charts. So let's dive onto the screens. Okay guys, so for this trading strategy, as I said before, I'm going to be focusing on just using price action. I'm going to be testing this out on the pound to the yen. I'm going to break down the strategy in a few different stages. So first of all, this is a scalping strategy. Although I'm going to carry out my main technical analysis on the larger time frame charts, I'm going to be using the 5-minute time frame for the execution and the management of my trades, looking to get some nice quick scalp action out of the markets. First things first is that I'm going to be using the 4-hourly time frame to identify the trend. The trend is my friend in the strategy and I'm going to want to follow it. So once I've identified whether the trend is long or short, I'm going to be joining that trend once I find some suitable entry indicators. To help identify the trend, I'm going to be utilising market structure, and I may also utilise the Fibonacci tool as well. I'm then going to drop down to the 1-hourly time frame just so that I can highlight areas of market structure in more detail and also plot a trend line. Once I have the main market structure drawn out, I'm then going to drop down onto the 5-minute time frame, where I can then look for some entry indicators. In particular, I'm going to be looking for a break and a retest of significant market structure or trendline points. And to help identify the right entry, I'm going to be looking for either some candlestick patterns or signals for those entry levels. In terms of trade management, I'm going to be using a stop that utilises market structure. So it's probably going to be around about 15 pips, because I don't want my stop to be too wide, because I am looking to take a scalp trade. So I don't want to be in it for too long, but equally I don't want my stop to be too tight and get stopped out unnecessarily. The profit loss ratio that I'm going to use for this is 3-to-1. So I'm looking to get a 3% win, risking 1% to make 3. However, once the trade moves in my direction and it hits my 1%, I will then bring up my stop loss to break even, just to try to manage the risk on the trade. So I think they're the main points of the strategy, and as part of this I've also got a document here that I've created, a back testing sheet, just to help me to record my data so that I can look back over this and maybe learn from this as and when I need to. Right, so I have my clean charts here, and let's go back into time. Okay, so I've dropped my backtesting tool onto the 29th of October 2020, and it looks to be quite an interesting point here in the market, because it looks like we had been coming in a downtrend. It looks like we've been in this pullback here, and I'm going to look into the closer price action for the 4-hourly time frame to just see whereabouts we're looking now for the trend. So we have a high here, and then we've made a lower low here, a lower high, lower low. The high didn't break the high of this pullback here, and since then we've been selling off with another lower low. So I'm going to take this to mean that we are in a downtrend, and for the nature of this I am looking for shorts only for now until it breaks these highs and the trend shifts on the 4-hourly time frame. So let's mark out the significant points in the market. We know this is the high, the most recent high here, so I'll put a market structure level there. As there are quite a lot of wick rejections here, it seems like price was actually ranging along this area before it broke down, so I'm going to include that as well as the low of this move. And the previous low of this, we also had this wick rejection here, was around about this structural point here. So at the moment price is pulled up to it and it does look to be closing above. If we can get a move back below this area, some sort of rejection, this could provide a nice zone for pullback for then executing to get a trade lower. And let's just have a look at the fib retracement as well. So for this, I've gone from the highest point here to the low, and what I generally like to see in regards to this pair as part of this strategy would be a pullback to the 0.38 level, the 38%. Which is quite close. It's just above the structural point here. It may mean we need some more pullback on the 4-hourly chart, but if it holds this level, it's another added area of confluence to be able to trade this. And I know that I said that I'm removing indicators and tools, but I do like to use this at the moment just as a guide, just to see, in addition to clean price action. And I think I forgot to mention as well, for this strategy, I'm going to try to just keep this in the actual active times I would trade. So at the moment we're at 1 o'clock in the morning and I definitely wouldn't trade then, so I'm going to skip this on. And this is a nice clear signal here on the 4-hourly. So we have a complete bearish engulfing. It's at an area of market structure. It's in the direction of the trend. And we know that fib point is here as well, which we probably have just tapped and rejected. Let's just check. It's literally just tapped that 0.38 level and we've got a really nice clear signal. So these are all nice areas of confluence to be able to get into this trade short. So I'm shifting onto the hourly time frame here just to analyze this further. And now I know where my significant points are as well as my trend line. Let's just jump onto the 5-minute chart where I can look for some clear signals for possible entry short. So here would be my first potential entry. We've had the pull back up to this area and we have a nice bearish engulfing candle here. So I'm going to enter a short position just below the low of that candle. So just at, let's say 72, just to add a pip to be more realistic, because there's probably going to be slippage or to account for the spread on my broker. Now I said before my stop would be utilizing market structure points. So I want it above this trend line just to give it some room. And I'm probably going to use a 15 pip stop so that it is above the high of this little consolidation area here. And something I want to do with this pair, I'm going to mark on my spreadsheet as well, is whenever I set a stop on a target, I'm going to add 1 pip just to account for the spread in my broker, because I know the spread is a little bit wider with pound yen, just to help give that some room. And let's set a 3R target, just to jump on the 1 hourly time frame, just to see that those are realistic. So my target is before this major structural point that could act as resistance. And let's just see what happens. Okay, so it hit the 1%, which would have brought my stop to break even, and fortunately it didn't come back up to break even, although it looked like it was getting close. So it would have hit my 3R target. So trade number 1, let's just mark this in here in case I want to come back to it. Was it 7:20 on the 29th of October? And I'm just going to repeat this process. So let's just go back to the 4-hourly time frame here and let's move to the next day. So we're still in a downtrend. We've seemed to have broken this resistance, although it's not broken it too much, so I'll just keep an eye on that. I'm going to add another little market structure point there. And let's have a little look at the fib as well. So the last pullback we had was here. Dragging that down to the low of this candle, and it does look like at the same place as this market structure is also the 38% level. So it might have pulled back enough for us to look for an entry. So I'll drop down onto the hourly time frame. And I've added this trend line here as a almost like a pullback area, really, because we're in this downtrend, so we're going to always want to pull back a little bit and follow this line like a guide almost. And because we're quite extended here, this has formed a green candle. It looks like it needs to pull back more, so I'm looking for some sort of pullback to the trend line or the market structure point on the 5-minute time frame. I'd like to get some kind of tap and rejection of this area, but as this could be a potential inside bar, I'm going to just set a short just below this area here. Okay, so this is a loss. This is it's why I like doing this. It's almost like revising and really practicing and honing a plan. Because I was looking at the break below this inside bar candle just here. And I was doubtful when I did it, and I don't think it was the right thing to do because it didn't actually touch this market structure point. I think that this would have probably been the better candlestick entry signal here because it tapped and we had a bearish engulfing as well. But even then, even if I had gotten in at that point, although it did come down, it carried on up to my stop, so it just wasn't meant to be. But I'm still going to mark that onto the charts. Moving this onto the next day now, and I'm just going to continue just editing these areas of market structure on the 4-hourly time frame. And we didn't break our higher high, so we're still in this downtrend. A bit unsure about this one because we've pulled back quite a lot. We've become very close to this previous higher high, so it may mean that there's going to be a more long-term correction or pullback here. So I'm just going to see what happens. So on the hourly time frame, we've pulled back to the main area of market structure on the 4-hourly. We've been consolidating here in this flag pattern, but we're making lower lows and lower highs, so we've still got the bearish dominance here. Just moving on to the 5-minute just to find an entry signal. I've just put a trend line here. And the opening 8 o'clock candle is a big candle down, a big bearish engulfing. So as part of my plan, I would get in using this as an entry signal, and I'm going to just set my entry just at the low of this candle. Stop would be the high of this move. I'd want it to be above this trend line. I'm going to add that extra pip as well for my spread. So it's quite a larger stop actually. We're using a 22 pip stop. I guess the question would be whether this is a good trade or not, because we've got this area of market structure on the 4-hourly time frame that would be in the way here. So I'll take this trade and follow the plan and see what happens, but that's why I'm using the trailing stop once I hit 1R. Let's just see what happens. It's just at 1R, so I would bring my stop to break even here. And it would have stopped me out. So a break even trade on this one. So just to reiterate, we've got our lower high here, our lower low, lower high, lower low, but we've actually made a higher high here above the previous higher high, and we didn't make a lower low, so it looks like there may be a shift in this trend. That being said, if it does move to the upside, if it gets above this area of market structure here, I'd be looking for some sort of retest and confirmation of this to then shift long. So I'll just see what it does on the 5-minute time frame. Okay, so we broke the upside of this consolidation flag. We've pulled back down to this market structure and we're forming some sort of support here. If it gets above the previous red candle, that'd be a nice inside bar break to the long side. So I'm going to plot a long position here. My stop below this market structure. So I'm going to use a 12 pip stop and add the extra pip on for my spread. And then as per usual, my 3R target. Okay, that's nice. Okay guys, so I've carried on for a little bit and I'm just going to show you my results so far. So I've done 12 trades and I understand that that's a very small batch when you are backtesting. I'm going to keep adding to these records, but it's a nice start to this idea, this trade plan and this price action strategy. And so far out of the 12 trades I've taken, I've had a couple of break-even days, I've had 9 wins and I've had 6 losers. But using this really nice profit loss ratio of making 3 really helps to make the winners count in this to really capitalize on profits. Because as you can see, I've got a 50% accuracy, so I'm only right half of the time. But my profit loss ratio, it actually says it's 4-1 here. Now I've been using 3-1, but I think it's because I've had 3 different break-even days, so I think that has actually lifted the profit loss ratio up. I've wanted to include the break-even trades because they are still trades. It's where the trade has moved and come to my 1% target, so I've adjusted my stop to break even, but then it's come back down and hit my break even. So I've included them just to have that in the data. But 12 trades, 50% accuracy, 4-1 profit loss ratio, which means that overall for this very small batch, I'm up 21%, which is a really nice start. What I'd like to do is continue adding to this and get a lot more trade records on here, because I'm not assuming that for every 12 trades I take I'm going to be 21% up. It's the ebb and flow of the market, as we all know, right? And there are significant periods of drawdowns as well as the highs, and this might be that I've just started and gone on a nice winning streak. So I'm not going to kid myself and think, great, let's take this live and let's start making 21% for every 12 trades. Be nice though. But I'm going to keep adding to this. It's just a really nice, interesting insight. And also what I do find important is just the active practice of going through the charts, following my trade plan step by step, looking for the trend, identifying the market structure and trend lines, and looking for some good quality trades and entry points. It's all good practice. So I hope that you've enjoyed this video, and I hope you found some value from it. Do let me know in the comments below if you have, or if you've got any questions. I'm thinking about carrying on with this, but I'm also quite like the idea of doing the same style but using the higher time frames for execution, so maybe the 15-minute or even the 1 hour. So let me know if you're interested in that below. If you've enjoyed the video, be sure to hit that like button and subscribe if you're not already part of the channel, and I'll catch you in the next video. Thanks guys, bye!